FOMO, fear of missing out. Hello traders, I hope you are doing well. In this video we are going to explain the FOMO in trading and how to build a trading plan in order to be immune from this feeling. FOMO in trading is the fear of missing out on a big opportunity in the markets and is a common issue many traders will experience during their careers. FOMO can affect everyone, from new traders with retail accounts through to professional forex traders. In the modern age of social media, which gives us unprecedented access to the lives of others, FOMO is a common phenomenon. It stems from the feeling that other traders are more successful, and it can cause overly high expectations, a lack of long-term perspective, overconfidence, and an unwillingness to wait. Emotions are often a key driving force behind FOMO. If left unchecked, they can lead traders to neglect trading plans and exceed comfortable levels of risk. Common emotions in trading that can feed into FOMO are greed, fear, excitement, jealousy, impatience and anxiety. 7 characteristics of a FOMO trader. Herd mentality can lead to irresponsible trade decisions. Trades governed by greed often end badly. Indecision. Using hindsight. It skews perspective and makes you dwell on the past. They scare to miss a great opportunity. Resting on your laurels and following the crowd. Let's compare the traders without and with FOMO. The first one plans trades, keeps a journal, has confidence in their own strategy. On other hand, trader with FOMO reacts compulsively, jumps on trends, fears missing opportunities. The first one conducts analysis, follows news. The FOMO trader instead takes opinion as fact, and follows rumors. Trader with a plan sets a comfortable risk-to-reward ratio. The other one considers only the upside, maximizes exposure, enters risky positions, panics, closes out, repeats. The first one follows a plan, keeps a log and achieves their trading goals. The other has no plan, doesn't keep a log. FOMO takes over. Let's get back on the chart example to explain a trade that I can qualify as a FOMO experienced. We have here US dollar Japanese yen 15 minutes chart. We have a clear downtrend structure. As we already told you several times, after a break of recent low we wait for a pullback. This is a must on our trading plan, and we try to respect this principle as often as we can. On 1 hour time frame we had a clear supply zone order block. Based on our trading plan, this is potential sell zone, and we must wait for price to pull back. But sometime the fear of missing out, the so-called FOMO phenomenon, affect us too. We saw a big impulse, and we wanted to join the move as soon as possible in order not to miss out. I didn't trade the previous day and I was hungry for a new trade. On 15 minutes time frame we had a supply zone and price rejected it with a doji candle. I waited for the next candle confirmation, and as we see here, it closed below the green candle. In this moment I put a limit order at the bottom wick of the doji candle, usually price mitigated. The stop loss was at conservative level above the supply. We also do not want to forget the imbalance zone below the 1 hour supply. Based on our trading plan, this is the trade that follows our rules. But anyway, let's get back to our initial trade. Price triggered our entry and went straight into profit, but not enough to make it break-even trade. Then price continued against our position. We had some rejection at previous pivot that could become a double top, but after several candles it stopped us out of trade. Now we are committed to follow our plan for the next trade and do not enter any premature or FOMO trade. The important levels are very clear, the supply zone with an imbalance zone below it, which makes zone even more powerful. Price reached the imbalance zone and dropped from there. What the FOMO trader do in this case? He jumps into a trade because the fear of missing out. We shouldn't do that, we must stay stoic according to our plan. Even if we miss the trade, there is nothing wrong. After the drop, price is continuing towards our entry zone. We have here an AB equals CD correlation. Price completed the pattern, but our entry was few pips away from this level, and we missed the trade again. But we waited for price to touch the entry level. After a small drop, price bounced from demand zone and finally triggered our entry. We had a fake out pattern that reinforced the sell trade. Price reached the target perfectly, and our long wait has been rewarded. As you can see in one picture, we had the first trade that I prefer to call a FOMO trade, and the second one, a trade according to our trading plan.